Serve Robotics just went from very overbought, potentially oversold, and we're going to break down why that matters. They've had some interesting financials recently, even a little bit on the poor side from the income, but from the balance sheet, they've looked good. And we're going to be also most likely looking to trade it this morning. If you want to tune on in at market open, it's the second link in the description below. So let's jump into it. Serve Robotics is a robotics stock that is building AI-powered low-emission delivery robots for the last mile delivery, so things like Uber and DoorDash. And they are already seeing some real-world usage right now. They've got some strategic backing with NVIDIA, and then some partnerships with companies like Uber, like we mentioned, Uber Eats. And in recent announcements that we've seen with the company, they've actually had about 2,000 robots operational across the US markets here in 2025 and anticipating growth into 2026. So the autonomous delivery model is a pretty strong model, and we've seen a lot of volatility on the stock. We were covering it, into 2025 from 2024 here, and we saw some big spikes up to $25 and then selling back down. They were very overbought back here, and they sold back down to $4. And we've seen them kind of pull back. Now, it's still a risky play in the robotics space because robotics are fairly new. This company has pretty low market cap, but you can kind of see this uptrend here, overall uptrend with the stock, where it's been kind of building this market cap. And they recently pulled down after selling down to $8 a share. They bounced. Today they're up about 1% into the market open, but pre-market basically. And as we're looking at them now, we're kind of looking for a potential reversal, right? So they came down to this support level, maybe a little bit of consolidation here at the bottom around $8. And we're looking for maybe what would be, a recovery similar to what we've seen in the past. Now, these recoveries are usually, even though they have some, again, we'll get into the margins, the financials, the recovery potential is around, between 50% to even 100% recovery if they get back into some of these levels we've seen them get into earlier this year. So there's a few things that are driving them right now. The financials, again, they're not profitable. In fact, you could even see their net income looks kind of increasingly negative, which could look discouraging to some, although their revenue has been increasing by about 200% year over year, and their revenue is still pretty small, but you could see that if they're losing money now, that's obviously a concern. Net profit margins negative, but it's not like they're spending, let's say, 500 million a quarter. In fact, it's still pretty manageable, because when you have maybe some risk around the execution, and even though they got some backing by Uber and others, you kind of see here on their site, their message is that they say, why deliver 2-pound burritos in 2-ton cars? And then they have a robot going through Los Angeles. I actually just saw one of these recently, and it's delivering the food to the from the restaurant to the customer. For some of their partners are like DoorDash and Uber Eats. So as you can tell, they're seeing some real world usage, and their revenue's increasing, but they're still very negative on the net income. So historically, they have been burning some cash, and the negative margins or negative returns there on the equity is something that you got to take into account. But when you're looking at the AI market, you're looking at how big of a market they're tackling. What is it? A $20 billion to $50 billion or even $100 billion market. They could really go outside of the US. And that kind of operation then drives their investor interest. So they've seen more assets over the last year. Their assets are up 386%. So they've gone from just 60 million in cash in 2024 to now 300 million in cash, while their liabilities have stayed low. And so they are relying right now on some execution. When you're looking at the stock, you see them get some momentum, and they look kind of oversold right now. A little bit of a bounce down on the RSI around this $8 price point. Next resistance or entry, not looking too bad, they still have a huge execution risk. We love to see them backed by top companies. In fact, we could pull up some AI analysis and get an idea of where they're going right now from a transactional standpoint, or what big investors are investing in them. But there's a lot of moving parts here. You got regulatory things are definitely a concern. If you have robots delivering in local communities, that's going to be probably a concern. If you have, let's say, failure or delays could also kill the business model, which I don't really know how well they've delivered compared to humans at this point. We don't really have any metrics there. We just know that they're much less of a economic tax than if you have cars that are driving, which also probably drive the economy in a way, because people are having to work more because they got to pay for their gas. In this case, you just got a robot doing it, right? But when you look at the insider selling, let's take a look at it. You do have some sells kicking in here. CEO sold. According to Grok analysis, there's been many more sells than buys. So you got 19 sells compared to 1 buy in the insiders. So insiders, for the most part, have been selling. They haven't been selling massively as far as total equities, but they have been selling. When it comes to the outside institutional investments, you got more investments. You got 11 buys versus 9 sells. So Serve Robotics is seeing more institutional interest. Now, when we're doing an analysis here, and I just wanted to ask Grok and or OpenAI or Claude, we use our AIs here in the app. We actually can see that the projections are actually fairly bullish. Let's see, maybe a little bit of a dip at market open, as the market's opening in about 12 minutes. But overall, over the next year, let's see, Grok is projecting 22% increase. Now, we could see maybe an AI or a quantum analysis on top of that. Let's see what IonQ thinks. Yep, it's the 1 hour. So the 1 hour, it's actually anticipating a slight dip here at market open and then recovery throughout the day. So we're going to be watching it this morning. If we get that recovery, what would that look like? You might see a dip down here around 9 and then see a recovery back up into that $9.80 to $10 or more today. And so the volatility and the short-term swings are pretty brutal with this one. You see it sell down from $18 down to, $8. We've seen it surge, 100% in just a few days. So it's slightly more speculative. The financials, you do see more backing in assets, which is good. And you do see more, interest from the public. So there's also some hype around just public. More of probably a long-term focus here on Serve Robotics, as I do hold a long-term position in this company. And that as they introduce more fleets of robots, they could probably scale to much higher numbers, and we'd see them potentially then be turning a profit. But I would say allocate cautiously. I do urge caution. There's still $700 million market cap. So there is some risk involved in investing in a company like this. But if I had to say, what was the perfect entries, if there was ever a good time to kind of look at it a little closer, it's at this support level that it just kind of bounced at here around $8 a share. See how it sells off today, potentially at market open, and we'll potentially be looking for an opportunity to buy if it presents itself this morning at market open. And then as far as long term, I think I got it in somewhere around here, around the $7 to $7.80. I got to check my Charles Schwab portfolio. But in the shorter term trades, we like to trade this one as well. There are some good opportunities, and right now seems like potentially one of those opportunities to be looking at Serve Robotics. So Uber backing, Nvidia backing, pretty good potential long-term play in the robotic space. We'll be watching it here into the next day. So we're going to be going live in about 10 minutes. If you ever want to tune on in Monday through Friday at our live sessions, see my entries, see my exits, watch me trade live, it's the second link in the description below. Surround yourself with like-minded individuals and join StockMe. If you'd like to learn how to invest using AI, then that's the place. And also, if you'd like to get your hands on some of these AI tools I just showed you in this video, it's the first link in the description to join the first access list. Now, when it comes to the video, if you enjoyed it, make sure to hit the like button. do consider subscribing, and I'll see you in the next one. Take care.